Today, I would like to address a question I received via email. Someone asked for my opinion on a currency pair I currently find particularly interesting. Hello, my name is David. I am a financial analyst with over 29 years of experience in currencies and commodities. In this video, I will analyze the Euro-Japanese yen currency pair. One of the currency pairs I find particularly intriguing is Euro-Japanese yen, especially as Japan's economy shows signs of resilience and potential strengthening, while the European economy is experiencing a slowdown. Let's take a closer look. Central banks and monetary policy. At its last meeting on 19 to 20 September 2024, the Bank of Japan decided to keep interest rates unchanged at 0.25%, maintaining its accommodative monetary policy. However, there are indications of a potential shift in the medium term, mainly due to increasing inflationary pressures, which are beginning to be felt more strongly across the country. The Bank of Japan highlighted that inflation, primarily driven by the services sector, continues to exceed the 2% target, leading board members to discuss the possibility of future rate hikes. For now, however, the central bank has opted for caution, concerned that a premature increase could stall the economic recovery, which is showing moderate but steady progress. In terms of economic growth, domestic demand has shown positive signs, supporting a fragile recovery, although risks remain due to global uncertainties. The Bank of Japan is particularly mindful of developments in the global economy and their implications for Japanese demand, which remains sensitive to external shocks. Looking ahead, the Bank of Japan has committed to closely monitoring economic data with the intent to act promptly if necessary. Specifically, should inflationary pressures continue to rise, a more aggressive approach to monetary policy cannot be ruled out. Analysts predict that, by the end of 2024 or early 2025, the Bank of Japan might opt for a rate hike, especially if inflation growth accelerates. This stance places the Bank of Japan on a different trajectory from other major global central banks, which are instead cutting rates in response to economic slowdowns. Consequently, Japan could see the yen strengthen in the medium term as markets begin to price in a rate hike. On the whole, the Bank of Japan remains attentive and prepared to act, but with a clear preference for a gradual and flexible approach, aligned with economic and inflationary data. At the most recent European Central Bank meeting on 17 October 2024, the European Central Bank decided on a further 25 basis point rate cut, bringing the deposit rate to 3.25%. This marks the second consecutive cut, something that has not occurred in a decade. The European Central Bank justified its decision by noting the rapid decline in inflation, which has fallen below the 2% target, reaching 1.8% in September. The European Central Bank aims to bring inflation back to 2% by mid-2025, moving forward its previous forecast, which had projected this for the second half of 2025. The broader economic outlook in the Eurozone signals a slowdown, with risks to growth continuing to lean downwards. During the press conference, President Christine Lagarde confirmed that the European Central Bank will adopt a data-dependent approach for future decisions, with additional cuts expected in December and the early months of 2025, aiming for a neutral rate of around 2%. However, Lagarde ruled out the possibility of more aggressive 50 basis point cuts, confirming that reductions will follow the current pace. This series of cuts indicates an increasingly accommodative monetary policy to address not only inflation, but also economic weakness in the Eurozone, which may continue to put pressure on the euro against other currencies. Macroeconomic analysis. With the analysis of central banks and future monetary policy outlooks complete, I now move on to an in-depth analysis of the Japanese and European economies, examining key macroeconomic data to understand their current dynamics. Below is a detailed overview of the economic situation in each area. Gross Domestic Product, GDP. In the first 6 months of 2024, the Eurozone recorded a cumulative growth of 0.6%, higher than Japan's 0.3%. This indicates that, at least in the first half of the year, the Eurozone grew at a more sustained pace than Japan. Estimates for the third quarter are expected on 30th of October for the Eurozone and on 15 November for Japan. Unemployment rate. The unemployment rate in both Japan and the Eurozone has remained stable in 2024, holding steady with only slight fluctuations. Despite a slight peak at 2.7% in Japan during July, the rate fell back to 2.5% by August, confirming stability in the Japanese labor market. Similarly, the Eurozone has maintained an unemployment rate of around 6.4%, 6.5% throughout the year, demonstrating resilience despite economic pressures. This stability suggests adaptability in the labor markets of both areas, indicating that employment systems are withstanding global economic uncertainties, with minimal variations that do not affect the annual average. Inflation. In September 2024, inflation in Japan dropped to 2.5% from 3.0% in August, mainly due to falling energy prices and stabilization in import costs, supported by a slight strengthening of the yen. Core inflation, which excludes fresh food but includes energy, remains stable below 2% in Tokyo, yet continues to exert pressure on services and non-energy goods, indicating persistent underlying pressures. In the Eurozone, annual inflation fell to 1.7% in September, down from 2.2% in August, thanks to a strong reduction in energy prices, which fell by 6% year-on-year. However, core inflation only slightly decreased to 2.7% from 2.8%, highlighting continued underlying inflationary pressures. Sentiment in October 2024, economic sentiment presented mixed signals between Germany and Japan. In Japan, the October Tankan survey shows a slight improvement among manufacturers, with the manufacturing sector sentiment index rising from +4 to +7, driven by a recovery in the chemicals and electronics sectors. However, confidence is moderated by uncertainties surrounding China's economic recovery, a key factor for Japanese exports. Japanese companies remain optimistic, expecting further improvements in the coming months, despite some inflationary pressures on costs. Germany's ZW index saw a significant improvement, rising from 3.6 points in September to 13.1 points in October. This reflects renewed confidence in future economic expectations, despite a deteriorating assessment of the current German economy. The index's growth suggests optimism for stable inflation rates, along with positive expectations for economic support in the Eurozone. In summary, while German sentiment shows signs of recovery and future expectations, Japan reflects cautious optimism, with improvements in manufacturing but still influenced by external uncertainties. Industrial production. In Japan, industrial production has shown significant volatility, with a 3.3% drop in August from the previous month. This decline was due to disruptions in automotive production related to safety issues and factory closures in response to earthquake and typhoon warnings. While this decline was partly exceptional, a gradual return to normal is expected in the fourth quarter of 2024, potentially stabilizing the industry after the summer period. In the Eurozone, industrial production suffered repeated declines in the first half of the year, but experienced a modest rebound in August, with monthly growth of 1.8%. Despite this increase, annual industrial production remains negative, with sectors like automotive facing challenges. Germany, for example, saw a significant fluctuation with a 2.9% increase in August after an equivalent decline in July. However, analysts suggest this is more of a technical rebound than a real recovery, as the German economy continues to struggle with structural issues and reduced global demand. In summary, both Japan and the Eurozone show uncertain industrial production, with seasonal effects and demand issues limiting growth. Retail sales. In 2024, retail sales have shown contrasting trends between Japan and the Eurozone, reflecting differing economic contexts. In Japan, retail sales have consistently grown, supported by wage increases that have boosted consumption for several consecutive months. In September, sales rose by 2.6% year-on-year, a slight deceleration from June's 3.8%, but still in positive territory. Despite price increases for some goods, the market has benefited from increased spending on non-food items, such as cosmetics, equipment, and automobiles, demonstrating resilience in domestic consumption, though at a slower pace than in previous months. In the Eurozone, retail sales have shown a weaker performance. In July and August, sales volumes posted modest increases of 0.1% and 0.2%, respectively, but remain barely above zero. Annually, consumption has been pressured, particularly in the food and fuel sectors, while some countries have seen significant declines. This weakness in consumption suggests that domestic demand in the Eurozone is constrained by inflationary pressures and economic uncertainties, reflecting a less stable recovery than in Japan. Final conclusions. Japan has maintained more sustained retail sales growth, driven by rising wages, while the Eurozone shows signs of a weaker recovery, with consumption constrained by inflation and greater economic uncertainty. The current monetary and macroeconomic landscape suggests divergent approaches between Japan and the Eurozone. The Bank of Japan may be compelled to raise rates by the end of the year, as inflation remains stable in services, while the European Central Bank pursues a gradual rate reduction to counter slower growth. Consequently, the yen will likely strengthen against the euro in the medium term, with markets potentially pricing in a more restrictive policy from the Bank of Japan, while the euro remains pressured by the ECB's accommodative stance. As of 28 October 2024, markets are expecting a 25 basis point interest rate hike by the Bank of Japan in December, alongside a 25 basis point interest rate cut by the European Central Bank in November and a further 25 basis point cut in December. Positioning strategy. These are the specific reasons why I am inclined to short Euro-Japanese yen, but at what exchange rate should one enter a short position? To pinpoint the optimal entry level, I use subjective probability, a concept I explain in my book, Forex Fundamental Analysis, available on Amazon, link in the description. I have identified two potential levels where the currency pair's rebound may stall, the 167.700 and 170.600 areas, as shown on the weekly chart. Exceeding the final level would mean a return to the highs, which I currently consider unlikely given today's conditions. Using value at risk, I calculate the stop loss. I also explain this aspect in my book, and based on the maximum loss I am prepared to bear if the trade moves against me, I determine the position size. In this instance, the value at risk 95% is 2.58%, meaning stop loss is set at 2.58% above the entry price. Final remarks. This is my Euro-Japanese yen analysis, following the approach used by fund managers. No indicators, oscillators, price action, or technical analysis, simply observing the conditions of both currencies, the economies, and the exchange rate level. This approach is guided by the actions of the most influential forces in the forex market, the central banks. This is the correct professional way to analyze a currency pair. It is essential to closely monitor data and central bank decisions, but if conditions remain unchanged, it is highly likely that we will see Euro-Japanese yen at much lower levels than the current one in the coming weeks or months. Thank you for watching this video. I hope the insights shared today are helpful on your trading journey. Feel free to share your thoughts and feedback in the comments below. If you found this video useful, please give it a like. To stay updated on my latest videos, be sure to subscribe and enable notifications. See you in the next video.